Hello everybody, this is Brandon from Galaxydoc Market. Today is July 30th, 2024. It's about 12:39 p.m., right? Smack dab in the lunchtime. And it is the fact that we are in the middle of the earnings season. We're at the meat of it, folks. And I want to present to you something to think about. For us, the top earnings trade of the week, which is Carvana and First Solar. So let's find out what we think of it. But before we do that, here's the disclaimer. Please read it. If you agree, please move forward. Shameless plug on X.com, Galaxydoc Market. Follow us there. There's a lot of great daily content that I can't put on YouTube. Or if you don't belong to our membership, then this is your best source for what we think and my prescient market commentaries. Anyways, please follow us. All right. So my main theme over the past year has been this concept of consumer demand destruction. You can hashtag that on Twitter or X.com, and you will find what I think about that and my work related to that. And this goes in line with continued consumer demand destruction. And so here we go. And the first thing that I'm going to talk about is First Solar. And they report earnings today, 7/30/2024. So I'm trying to get this out so maybe it gets to some of you. You don't have to front run this for sure. But I think there's going to be a significant price movement on First Solar after hours today. Okay, so what do I think? Here's a couple of things that I do think about. Is that First Solar has been the darling of the tech space over the last couple of years, and it is trading at near all-time highs, and we'll go over the charts and why I'm bearish on this particular name. Now, it doesn't mean that they're not going to beat earnings. They've been beating earnings, good part of their earnings reports, and they've been beating on revenue estimates as well. You can see that they've been handedly beating in most instances, except for the Q4. Okay, and but everything else, I mean, they've been coming in pretty close. This is a stock that is dependent on the earnings beat. The revenue really doesn't matter as much. One thing I do want to point to you, and this is just a synopsis. Because I want to get this out as soon as possible. Look at the insider selling that's been going on throughout the year. Okay, there's really no net buying. Now, that doesn't mean by itself that it's a short or a long. But what I do want to point out to you is that under Q2, there's been significant selling in both of those quarters, and Q2 has generally been sort of bearish for this stock. Okay, so I want you to pay attention to that. Okay, so what I've done is, why do I think that there is continued potential downside? Well, if you look at the sector, S&P 500 sector analysis, remember the technology sector was at the top right here, right? Now it's at the bottom end of everything. Okay, that means that there is a constant and significant price movement, because obviously the market has been propped up on the heels of this technology sector. So when we dig into that technology sector, we see that the strongest sector so far, this is the best of the worst, and, is basically renewable energy and semiconductors. Now, I always pay attention to these, the plus or minuses, and this shows distribution, especially on the semiconductors and renewable energies, right? But it's just been a shit show in terms of this sector. Okay, so we're going to focus on renewable energy, and at the top of it, and I use this scooter as a overall ranking of how strong within the sector is, within the renewable energy sector, within the technology sector. So First Solar is right there near the top, which means that it's been a good performer. It's probably near the top. We're going to look at the charts about that. Okay, but it's been bearish over the last sessions, and we're down about 2.18%, probably ahead of the earnings. Okay, so let's look at the charts and then find out what's going on here and why I think there's more downside here. Okay, so we're looking at the daily of the First Solar, and you can see right away that we have pretty much flattening out the relative strength. Okay, there's a slight uptrend as we're going down. Okay, we topped out near June of like 18th, and then we've been going down ever since. And and we talked about the sector rotation a few months ago, and we nailed this trade as well. And now it's time to come into and look at if there is going to be any opportunities on the earnings side, which is basically going to happen tonight after the market closes. It's been running into this downtrend line, and we're running right into it. We're finding support at this 20 SMA. The earnings, not earnings, but the volume has been predominantly, if that even matters, on the sell side. But one thing you have to understand that this may be the calm before the storm, because the volume has been declining into the earnings. Remember, though, also tomorrow is FOMC, and so that's going to cause a lot of volatility. So this is why I'm looking at this now. First Solar has found a bottom, and it's basically moved up a little bit higher, but realistically, it's running into this downtrending line. The MACD has formed a bullish cross, but it's just really lackluster. We got to pay attention to this, because this usually says that there's some bullish moves coming, right? And so we got to be careful, and we have to do further analysis. The CCI, however, it has been divergent, right? I mean, it's just basically lacking momentum. It's moving down. There's not a lot of conviction in buying this, and it's been pretty weak, even though it's trading near all-time highs, right? But the stochastic is telling you a different story. Basically, it's bearish. You've got this crossover ready to form, which usually signals a short-term trend change, okay? But when we look at the PPO ADX, we've got a situation where we're kind of beginning to form this kind of situation, right? This right here was bullish, but it was very flat. And now I think after earnings, it may form this bearish formation. When you see something like that, it's kind of foretelling you, hey, there's some bearish moves coming. Accumulation and distribution has been awful, right? It's basically trending down. And then, of course, ATR is pretty decent. I mean, it's got an average true range is at 11.57. Either it's going to break up higher or it's going to break lower. Either way, it's going to break from its current trend, which has been up. We've been correcting for about a month now, okay? And is it oversold? And that's the question we need to ask is it oversold? Not by a long shot. We've got so much more meat on the bones. And in fact, can it pop after earnings? Of course. But I believe it'll stall somewhere around here if it pops. Otherwise, this is a gap down candidate. We can basically, if it gets below this 100 moving average, which is the green line, we're coming right below, all the way down into this level, all the way down into the previous breakout area. Now, it's not going to happen in one night unless they report horrific earnings, right? Now, the other thing is, I think the market is pricing in a potential Trump win in November, which means that we're not going to have Democrats in the office, okay? I'm not predicting presidential election cycle. However, if Trump gets into the office, and this is, you got to pay attention to this, renewable energy companies are toast. Okay, they are not going to have the valuation that they once did. Let's look at the weekly real quick. Okay, on the weekly is showing you a different story. On the daily, maybe it'll bounce or not, right? But on the weekly, we've got a significant downtrend on the RSI, right? I mean, if you really want to be, technical, I mean, it's a pretty steep downtrend, lack of relative strength coming into that. Now, the other thing is we're kind of forming this triangular formation. We have this little support right here. If this 20 SMA gets broken, folks, all right, it's lights out. So I drew two volatility box ranges right here, and these are likely initial targets. Okay, now can it bounce? Of course it can. I don't advocate front running unless you've been doing so well and that you have some risk capital that you're willing to lose, and then that's fine. But you're always invariably 9 out of 10 times are going to end up adding to these or changing your strike prices. We play with options. We trade with options and directional, and also hedged. And so basically what we're talking about is I think that there is a significant chance, especially if there's a slowdown in the renewable energy, these are likely targets into this box. Pause it. I'm not giving you price targets unless you're a member. And but you can kind of see what's happening. This should give you a lot of clues as to what may happen. Now, there's been predominance of selling activity. Okay, we did have this gigantic volume from the previous earnings, right? And then we gapped up and then we topped out and we're coming down. So we're near the top, folks. I mean, we really haven't really started selling off until we start getting below these levels right here, okay? And I think that's what may be coming, okay? Now, can it pop? This is why you do not front run earnings, okay? Unless you have the level of conviction and know what you're doing and you're willing to lose the money, because front running earnings is a crapshoot, folks, okay? But if you're going to front run, you're going to do it anyways. You might as well look at stocks like this. Okay, so that's kind of what we have. And the CCI is directional. There's people dumping this stuff. Stochastic is negative. And then on the PPO ADX, we got this nice little bearish formation, right? We got these forming. Okay, that's bearish, folks. All right, accumulation and distribution. It's been selling off at a rapid rate. Okay, and that coincides with the insider selling as well as sector rotation that's going on right now. However, look at the ATR. The average true range is significantly high. And I use this as a momentum indicator. If we start breaking, can't break above there, and we start pushing down, we're going to have a significant increase, okay? We're going to have a significant increase in this downward movement. Okay, so that's our weekly. Okay, the second one that I'm looking at is Carvana. This is the consumer demand destruction play that we have, and they report earnings on July 31st, which is tomorrow, coinciding with the FOMC, so 7:31 after hours. Okay, let's go really quickly into this basket case of a stock. They've been under fire for a while, but they've gotten some financing over the last few years, and it looks like they may have turned it around. When you look at it, though, they are continuously losing money. And, if they lose money less than anticipated, this thing can shoot up higher. The problem right now is, we'll get into it a little bit, is the delinquency, because Carvana does their own in-house financing. And the second thing is, there was a significant price inflation post-COVID on used car prices. And I think these guys are trying to outcompete all the dealerships by overpaying on the used cars. And so now we're here where there is now price deflation going on, and we'll see what's going to happen. The main issue, though, is that the expected revenue, okay, if they beat on revenue, it seems like this thing pops no matter what. Okay, and so these are the things that we need to look at, especially in Q4 when they missed out on the revenues, the price went down. Now, the other thing that I like to look at, obviously, is insider selling. It's been nothing but insider selling. Yeah, in 2022, when they're coming out of their doldrums, and it looked like they're going to not declare bankruptcy, you saw the insiders buying. Hey, the charts don't lie. There is insider dumping. This is part of the consumer discretionary sector, auto loan sector. Okay, we're in a environment where no one's admitting to it, but we are in a recession. We are going into a recession, and they're going to tell you after we're knee deep in it. Okay, and we have inflation. People are losing jobs despite what the ABC agencies tell you. That's what's happening. Okay. Now, I just wanted to reiterate the delinquency rates are at 2008 levels. Auto loan transitions to serious delinquency. Okay, what does that mean? I mean, that's repo time, folks. The tow trucks and these people buying cars, used cars and new cars, they're all the same things right now. And if you talk to any dealers right now, they are trying to increase incentives and things of that such to bring people into the doors, and that's just not happening, because even if they give them a loan, they're defaulting on it. And so this is what I wanted to show you, and you have to pay attention to this. And this is why I'm bearish on Carvana at this point. Okay, so the next thing is that car dealerships are hurting. We talked about that just now. Depreciating overpaid used car inventory, especially Carvana, which try to outcompete all other dealerships by overpaying 15, sometimes 30% above Kelley Blue Book price, wholesale price. And so that's the problem, right? So let's look at the charts real quick. So when we look at Carvana right now, obviously we've got this RSI that is declining. We're near the top. And guess what? Right here, we've got this nice little head and shoulders forming, right? On the daily. I mean, it's beautiful. It's about textbook as it gets, okay? Now, does that mean that it's going to crater? No, it can't. It doesn't. We don't know what kind of numbers they're going to report. Are they going to be truthful about what's actually happening and things of that nature? I just don't see how they could hide it. So we got a nice little head and shoulders formation on the daily. And, we broke through this uptrend line, and we're smack dab right here. There is a 50-day moving average, but here's something that I need you to understand. We are below the 20 SMA, which is kind of like the magnet to where prices gravitate. And so we're just chopping around in this 20 SMA right here, this red dotted line. All right. The likely target is that post earnings, either we're going to bounce a little bit higher, still doesn't negate this head and shoulders, maybe come up to 141 and then start selling off, shorting the pops, or we just crater below, and there's this huge gap that has yet to be filled down into this 90 to 85 level, and then of course 200-day moving averages right here in the 74.20. If there is a problem, because this is a highly leveraged and debt-ridden company that has overpaid on their used cars that they bought from consumers above wholesale, and now they're dealing also with delinquency problems, like with all car manufacturers. We have a declining volume, but we've been seeing some selling activity. MACD is definitely negative, right? It's bearish. CCI is completely negative. We have stochastic crawling over, and we have obviously a continuation of sorts in the PPO ADX. I mean, we got this kind of action going on right now. That's bearish, folks. And so it's not oversold, and be careful what you look at here, because when you look at the accumulation and distribution, there is abject selling. Insiders are selling, so why would it not appear like this? Okay, even though it's hovering near the all-time highs, and I know that there's a lot of call buying activity, so yeah, you do have to consider that, but I do believe that there's no way that given the fact that everything is accelerating on the recession side, and the car dealerships are just taking it on the chin at this point, and we're near the top on the ATR, and so I think we're going to have some expansion here to the downside. I use this as a momentum change, and I think we're near the all-time high. If it starts breaking below this line, you're going to see an acceleration in sell-off activity. Let's look at the weekly. All right, so weekly is, it's pretty straightforward. We have divergences at the top right here. We have this uptrend line that has yet to be broken on the weekly, but that coincides with 107. There's a lot of meat left on this bone. In fact, if they do bad, and the earnings I think are not going to be that great unless they pull something out of their butt, or I'm completely wrong with my analysis, I think somewhere between 90. Okay, this is what we're looking at, somewhere between 90 all the way down to this breakdown area, coinciding with this uptrend line right here, is possible in the next couple of weeks. Okay, on top of all that, I'm a big fan of my MACDs and PPO ADX and CCIs. I mean, look, we're forming a death hook right here. The MACD histogram is negative. CCI is telling you that there is selling pressure, right? It's losing momentum. There's sellers more than there are buyers, right? The stochastics, again, negative. We've got PPO ADX on the weekly. Realistically, it's just flattened out, but we're beginning to form this type of formation. Okay, and I think if earnings gets really bad, then we're going to see this type of a fall off. And I think that's what I'm expecting. Now, does that mean that it can't bounce initially after earnings? Of course it can. Okay. However, the stock, everyone's, I don't know why they're so bullish on it, but look at the accumulation distribution. It's pretty much bottomed out. Yeah, it's kind of some slight accumulation, but overall it's low. ATR is basically very low, so we're going to get some price expansion. We are near the top, folks. This is near all-time, not all-time highs, but the last 6 months highs, right? And so can it come back down and start selling off? The market correction is in full swing, and if this thing pops and you want to short the pops, and if it gaps down, if you have the capital to waste, and if you want to be a gambler, yeah, I mean, if you had to do it, you're going to do it anyways. This is the type of stocks that you want to do that with. So bottom line, Carvana will likely continue with consumer demand destruction. And because they are both their financiers, they have their own in-house financing, and they are exposed to subprime auto loans, okay? So with these delinquencies rising, I think it's going to eat into not only their revenues, but they have cars that they overpaid on that is significantly depreciating in price. So unless they're very efficient with their AI platform that they tout, and people are buying all the used cars from them, we're going to see some significant problems. First Solar is marred in a significant sector rotation, right? If the markets are pricing in a Trump win, First Solar is going to continue to correct. So pay attention to prior to and post earning release for significant price action to the downside. I always say, you know what, even if it gaps down, there's so much IV percentage that needs to be crushed that you will have opportunities. But I think if you are one of those people that like to front run earnings, these two represent pretty decent opportunities. Not financial advice unless you belong to my membership group, okay? All right, so thank you for watching. Follow me at Galaxydoc Market. Follow us. Comment, please. I love comments, good and bad. If you think I'm full of crap, tell me why, so I can learn from you also. If you want to work with me, Coach Brandon at protonmail.com. Otherwise, subscribe, like us. Thank you so much for watching, and good luck out there.